So as you might have seen in the previous example of our Euro USD, that trade we had to analyze and basically make our final decision whether to go up or go down. So whether we are buying or we're selling the position. So here at Day and Night Forex, we basically came up with these 3 skills that we believe that every Forex trader should have to be able to win in this market and be able to be more disciplined so that you can handle your profits and you can grow your profits and cut your losses short. So these 3 skills that we have developed are basically the anticipating, planning, and analyzing. So as your Euro USD example, making a Forex trade can be extremely risky. Like anything that has risk, that takes risk, you can take precautions to try to minimize those risks and the impact. So in Forex, these are the 3 skills that can basically help you manage your trading risk. How do you actually handle risk? It is important to realize that even the best Forex traders have losing trades. While you may make some successful Forex trades, you will also make some losing trades. Fortunately, there are a number of things that you can do to anticipate risks to protect our positions. We have different orders that we can actually make use of. So firstly, we have the stops, we have the limits, and other different orders. So one of the most common ones, which is very, very crucial when it comes to trading here, day and night, that we make use of the most, is called the trailing stops. So by moving your stop loss to entry point for of a few pips above your profit, you can also that means you can actually protect your order from going back into losses once you have secured some profits, right? So going back to our example on the Euro USD. So right here, let's say you have moved, you bought here, right? And then let's say the market has moved and you have seen that you are somewhere around here. Let's say you're seeing that it's a potential resistance, which is going to push down your price back down. There's a potential of that happening and you're not sure about it. So you can just move your entry point. You can move your stop loss, which was right here protecting you from losses, right? So if it had hit here, you would have taken you out on a negative. But here right now, you can move it from there and then move it to somewhere like here, right? So that you entered your position right here, but then you have secured a bit of profits right here. So including your spread, it might actually bring you to either a break even or a little bit in profit. So once you are right there and you protect you can actually just sit back and relax, knowing that either way, if this carries on, you have secured your profits and your profits will keep on growing. But if it decides to actually come back, you have at least broken even or secured a bit of profit. So that's what we mean by trailing stop. So if this market carries on and actually comes back to here, maybe you have a take profit at that point, or you don't have. If it actually continues to come all the way up here, then that means we're just going to move our stop loss from this point. We're going to move it, just trailing. So we're just going to be following every time that the price goes up. We're just going to be following those certain amount of pips. But this can be automatically sorted out on your PC using a certain amount of calculated pips that you're going to be moving every time the price moves by a certain amount of pips. Then your stop loss will obviously triggers based on that amount of pips that has been moved by the market. So let's just go back to our slide again. This is one of the ways you can make use of to protect yourself from losses and basically have a calculated risk management plan. So risk management is very key when it comes to trading Forex. So you can also close half of your positions and let the rest run. So let's say, for example, you opened a position, right? And your position, you went in with a standard lot, or you went in with a standard lot and you went in with a 10, right? 10.00, you like what we did on the Euro example. So Euro USD, you went in with this. But then at the same time, let's say the market was going down, right? And then you reach a point and then it shot up. Let's just say it shot up. It was a quick move. And then you saw that, okay, cool. Maybe there is some sort of sub resistance right here that might force your price to go back down where it came from. So what you can do, you can secure these profits right here. You can secure some of the profits right here. So you don't have to close the whole position. You can modify it. So when you modify it, you can actually decrease this amount from 10 and maybe take half of it. So you can decrease it by 5. That means your new position won't be 10 anymore. You'll still be in the same trade, but then your position will be decreased to instead of a 10, it will be decreased to 5. So let's say you minus a 5, right? You minus a 5 from that trade. So you only have a 5 lot size in that trade, and the other 5 you've basically secured a profit, and those profit will be secured in your account, and you don't have to worry much about it. Even if it goes down back to where you started off, right, that means you still have at least 50% of that potential profits that is currently running in the running trade. You have secured it and it's in your account. So that is just another way to basically cut your losses and manage your risk, so that you can secure some of the profits and not just lose everything if the market end up turning around and going back to where it started. So that's another way to do it. Now, another important factor is setting your proper levels. So what I mean about this is that when you open a trade, you obviously have your TP. So you can set your TP and you can step your stop loss. So this is a take profit, and then we have what we call stop loss. So these levels are very crucial when you're opening a trade and entering a trade, because stop loss basically protects you in case the trade goes against you, and take profits is a position where it can automatically close your trade in profits once it's reached a certain target or a certain point in the market. All right, so usually this can be at a support or at a resistance, and where the market can potentially turn around after basically hitting this point in the market. So these are very important, and you might say it's actually an art, because you have to practice this, and you have to basically be very accurate on this. Otherwise, this can make or break your account. So it's very crucial that you take some time to really narrow down on your analysis and make sure you have a proper stop loss and take profit set up for your account to be able to manage risk properly. Another important factor is actually to focus on your emotions, because really when it comes to trading, I would say it's about 90% mindset and then 10% technical, so it's really crucial to have a mindset of having that calmness when you open a trade, because sometimes a trade can go against you, which what we call the market makers. So they try to push the price to a certain point just to stop out people, and it's also called stop loss hunting. So the market will be pushed very hard in the opposite direction just momentarily before it actually turns around and goes very hard in your position in the right direction that we had predicted before. So mindset is one of the key points when it comes to being a trader. So try to keep your emotions out of your trading career, because it can really destroy your account if you're not well managed on the mindset side. So try to stay objective and be calm when it comes to trading forex. So one of the most common quotes that are out there when it comes to trading forex is that the market takes away money from those who are not patient and put it in the pockets of those who are patient. So try to be very calm and just do your analysis. Do your research, do your proper research, set your TP, set trailing stop loss, so that you know that you're protected and you have a better risk management plan. But that also brings us to having a trading plan, and that you stick to it. So sticking to a trading plan can be really hard, but is one of the best way to guarantee your trading success. So it's very crucial in that sense that if you don't follow it and you don't actually have a trading plan that you create for yourself, so this course is going to give you an overall structure on what is forex trading and how to trade it, right? The techniques and everything. But when it comes to trading plan, this is actually more of a personal thing that you have to develop on your own, because a trading plan is your own thing. Is something that you have trained based on your emotions, based on your mindset, and what your monthly goals that you have for your trading plan, right? So whenever you enter a trade, you must know what you want to achieve from that, right? It's not like you enter a trade and you just hope to make the most money out of it, or you may hope to make enormous amount of money out of that thing. So it's all about breaking it down according to your trading plan and everything. So some of the very important questions to ask yourself when constructing a trading plan are the following. So will I trade only one specific currency pair or many? So as I said in the beginning, I would advise you to choose 2 to 3 currency pairs that you can focus on and try to understand the patterns. When does this currency pair actually move? When does it move the most? What news affected the most, which we call fundamental trading, which is we're going to cover that later on in the basics part of this course, just a little bit later on. But basically you have to choose a currency pair that you're going to focus on, or you're going to focus on just about any currency pair that you see a setup or that you want to analyze that day. So the second question is, will I trade on a daily basis or hold my positions for days or longer? So basically what I want you to notice when it comes to forex trading also is the fact that we have 2 types of traders. So 2 of the common types of trading that we have one is called scalping. So when we're scalping the market, this means we basically trading in and out of the market. So you can have bunch of trades in a day, but then we have what we call swing trading. So with swing trading, you basically can hold a trade for weeks, for days, for months, even for a whole year. So basically you enter your position and then you just hold it, you just let it run. So here, this is where you will be using bigger time frames, so you're no longer trading on a 15-minute chart. So here we can even start from the 1-minute chart. So starting from the 1-minute chart, you can go all the way to maybe roughly about the 4 hours chart, but definitely not beyond a day. And then from here you can also start from the 4 hours chart, analyzing, and then go all the way to the monthly or the weekly chart. So it just depends on how long you want to hold this trade for, but you can even go to as much as the monthly chart. So if I can just quickly show you on an actual chart how this looks. So if you come here to your trading plans right here, time frames, so you actually even have a second, but I would recommend that you take a look at any of this. But you start from here. So with the scalping, these are basically the most common time frames on MT4 and MT5. The most common ones are the 1 minute, the 5 minute, the 15, 30, the 1 hour, the 4 hour, the daily chart, the weekly, and the monthly. So but when you come here to trading view, as I said, you can use this for charting. You can go deeper. As you can see, you even have 1 second, 5 seconds, and 30 seconds, but generally speaking, you use the 1 minute, 5 minute, 15, 30, 1 hour, 4 hour, the daily, and the weekly time frame. So these are the time frames you'll be using to basically determine when to enter a trade and when to exit. So the bigger the time frame, the more overall direction of the market that you're using, and obviously the stronger your analysis actually is, because that means that you are actually analyzing the main trend of the chart and not just the current chart, right? So if your analysis is on 1 minute, that means it might not last for the whole 15 minutes, right? Maybe when it reaches another candle to open on the 15-minute chart, it might change direction. So what do we do? In Forex, we basically focus on the top-down analysis, meaning that you start from if you want to trade on the 5-minute chart, you're going to start from at least the 30-minute and the 15-minute chart to analyze and see what is going on there, to capture the main trends. And then let's say on the 30-minute chart, you figure out, okay, cool, the trend is going up, is a bullish market. So that means on your 3 minutes, on your 1 minute, on your 5-minute chart, you're actually looking for entries that will support that trend, which is the bullish, right? You're looking for buys, opportunities, using the techniques and skills that we're going to teach you later in the course. So that's basically a quick introduction to time frames right there. But as I said, you can either scalp or you can swing trade. It's all up to you. You can't really say which one is better, which one is not. So it all depends on your mindset, how much amount of money you have on your trading account, and basically your trading plan that you are constructing using these questions right here. So the third one is going to be, how much do I want to make? So as I said, when you enter a trade, be specific about how much you want to exit, how much is your weekly goal, how much is your monthly goal. You need to be able to know that before you even open a trade, before you even start trading, right? You need to know this. This is a very crucial moment, otherwise it's going to make or break your account. This is really one of the most key points that you need to discuss on and really sit down and relax and you implement in your trading plan. All right, how much am I willing to lose per trade? So this is basically where the stop loss comes into play, as we talked about earlier. So we talked about the stop loss. So the stop loss, which is also known as this SL. So this will determine where a trade will stop you out. So if the market decides to go against your trade, so if your analysis was not correct, that means you have to set a certain amount. Okay, if you say, okay, cool, if the market reaches this certain point in market, it can take me out, and you obviously be able to see how much you'll be kicked out with. Maybe it's a 10% of your account, it's 1% of your account. It's also part of risk management, so you have to implement this. Also very, very important aspect of your trading plan as well. So how much am I willing to lose before I stop for the day? This is very crucial as well, because sometimes I see a lot of traders, as soon as we hit a stop loss, we go back in again into the trade, and at the end of the day, that's like one of the fastest ways, if not the easiest way, to actually blow your account in a matter of minutes, in a matter of hours. Okay, so when you are stopped out, you need to have that specific amount to say, okay, cool, if I blow this amount of money out of my account, this certain percentage out of my account during a day, then I'm completely done for that day. I have to wait for the following day. And then when I analyze will I look for news or other events? Will I examine charts on price movement? So as I said, we have two types of trading as well. There are two main factors that we use to be able to determine whether it's a buy or sell, which is fundamental trading or technical trading. So with technical trading, you're basically analyzing the markets, you're reading the charts, and all that stuff. And then with news that are released during events, there are events that you can use. One of the best calendars that we use is actually called investing.com. So in investing.com, you can go and follow the calendar there, and the other one is actually found on Forex Factory. So when it comes to fundamental news, we're actually looking at the ones that have the most impact, and on both of these two platforms, they actually show you which ones have the most impact, or the most impact on the currency that's the news is being released on. So if let's say there's news on USD and you are looking to trade a USD JPY, that means now you need to go and see, okay, how much is the impact that is being anticipated on this news when they actually come out. So there are three types of impacts that they basically rate. So the impacts are rated in three different ways. It can be minimum, so it can be low, it can be medium, or it can be extremely high. So usually you have to focus on the medium and the high, but definitely the high. So the high will definitely have an impact on your chart. That's why you see some candles that are just like really huge, 1,000 points that has moved in a matter of minutes, in a matter of 1 to 5 minutes to 15 minutes. But just one huge candle that usually comes out when it's on news time. So be sure to watch out for that. That can impact your trading very badly. So be sure that you actually implement this in your trading plan as well. The last two questions: how will I use stops to control my risk? As we explained earlier, stop loss, the amount of money that you're willing to risk per trade. And as I said, professional traders risk anywhere from 1 to 10%, no more than that. And then the last question, but definitely not least, will I have many profit targets or only one? What profit gain to expect? So when we talk about this, basically you can have TP1, TP2, different take profit points on the chart when you're analyzing. So it's up to you whether you're just going to have one point that you say, okay, cool, this point I'm going out or I'm closing all my positions, or if you have two positions, as we explained earlier on, that you can actually take out some of your positions out, right? You can exit some of the positions. So as we explained, that if you go in with let's say you go in with a 10 lot size, you can at least remove half of that and take profit on the 5 lot size, and then have 5 lots left in the trade, right? So you can remove it and just have 5 lots left in the trade. That is one of the skills that you can use very well with the TP1, TP2, if you have different take profit points on your chart after analyzing. So that's basically all the questions that you need to ask yourself when constructing a trading plan that you're gonna try to stick to. Be disciplined enough to stick to it, and this, as I said, is very crucial for your trading plan. So after you answer it all, write a detailed plan of action and stick to it. It'll be hard, but exercise it and it will become easier. And as you all know, repetition is the mother of success. So be sure to exercise this over and over again. Demo accounts, you can blow as many as you can, and basically keep trying, keep pushing until you have a specific trading plan that you say, okay, cool, this is the trading plan that works for me and I'm going to stick to it. So let's go into our next lesson.